So my name is Joe Cadle. We're here to talk about marketplace liquidity and the impact on the auction lanes. So one of the reasons that I'm here, just kind of the basis for my opinion and my personal point of view, I'm with AFC. I'm the Senior Vice President of Operations, and we are part of Car Auction Services, the larger entity. You probably know us more as ADESA, Insurance Auto Auction, and AFC. We also have multiple ancillary companies underneath. To me, the shorthand is we don't make vehicles, but we pretty much touch that vehicle in multiple times of its life cycle throughout the rest of its existence. So we offer a very wide range of floor plan solutions and really meeting the dealer's diverse needs. We view it as we need to go to the dealer, speak to them, find out what's going on in their particular world, their business model, tailor programs to meet that. And although the majority of AFC's business is targeted on independent used car dealers, we also have exposure and concentrations in power sports, salvage or dismantler, rental operators, RV dealers, and commercial truck dealers, more of the diversification of assets for us. So really, for the integration as to why we're talking to primarily at an auction conference is what types of assets are coming through the lanes for you. You've got to make sure that there's a very broad depth of relationship with your sellers, making sure that you can meet the needs of liquidating their product offerings. And the point is that we have lines of credit that allow them to purchase that inventory, adding the liquidity into your market. When you look at a typical independent dealer profile, typically they've been in business for 14 years. On average, they have about 8 employees. They have about 35 vehicles on the lot. They sell about 36 vehicles a month, and the average price point's around $9,000. And those are stats from NIADA, just showing the typical profile that we're helping drive liquidity for. Most independent dealers are very small businesses. The owners are wearing lots of hats. They're very divided. They are managing a lot of their business needs on a cell phone, and they really rely on their floor plan company for structure, liquidity, really having a holistic view of their business model, being able to introduce best practices to them, and introducing some discipline into their business model. So we have over 120 site locations, branches. We are currently in 57 ADESAs. We're in 15 insurance auto auctions. And one of the things that's most important, I think, to the folks that would be in this audience are we're co-located in 21 independent auto auctions. Which may seem surprising as we're part of a larger company, but we really view our business as making sure that the independent dealer has the liquidity that they need in order to source the inventory from wherever they need to buy that particular piece of inventory. If we restrict the inventory sourcing, then we're restricting their options to run their business successfully. We also have 31 locations in what we call loan production offices. Those are basically in dealers' traffic patterns. They're not co-located within an auction, but they're somewhere near where dealers are concentrated or where typically maybe in between 2 auctions, and it's a natural traffic pattern for the dealers. And that really speaks to the value that we bring to the lanes because we are agnostic about where the money is spent, and so that gives all auctions an opportunity to really court that buyer because you need those buyers in the lane to raise their hand or else the process kind of breaks down, right? But they need to have the confidence in their floor plan provider in order to raise their hand and have that predicted liquidity so that they can make the right purchases at the auction. So more than 80% of our floorings come from in-person or online auctions. So we're putting buyers in lanes, and we encourage our buyers to purchase inventory outside of the auction as well. We are a conduit for folks to handle trades, which are not running through the auction lanes, but also giving them the ability to source that inventory from wherever they find the particular car that they need. And if you think about where that independent dealer fits in the food chain, they're a large driver of the volumes in the auction lanes. They may not be the #1 buyer on the current year or 1-year older vehicle. Some of them do have a business model like that, but they're helping the dealer that takes in the trade, they're helping liquidate that trade. So it adds a lot of breadth and variety of what you can convert in the auction lanes. And it's about the conversion rate in the lanes and the percent of bid. By having a floor plan product that's consistently delivering to the needs of the dealer, they then can transact consistently in the auction lanes. So they can help you continue to get the bid prices that you want, have the active buyers in the lane that you need to attract the sellers, and continue to have consistent conversion rates. Floor plan companies significantly impact both of those two metrics by making sure that they have the predictability in order to do that. Chances are, if you're an auction owner or a GM, aside from the overall management of your business, the vast majority of your time and focus is not most likely spent in your relationship with your independent customers. It's your franchise customers. Those are the large drivers of volume. Those typically the Fords, the Chevy, the big dealer groups. Your franchise customers are focused far more on buying from your upstream and closed sales, where presumably there's less competition and the values are more predictable. But what about the units your franchise customers are selling at the auction? So they need to be able to liquidate the inventory that they no longer want to have in their stores, and you can continue to service a more holistic relationship. Yes, you're giving them the vehicles to stock their lot, but what about the things that they need to get rid of? So who is buying those units? That's typically the independent buyer. We can't overlook the strength that the independent buyer has in the marketplace. There's an estimate generally of 40,000 independent dealers, which brings a lot of stability and strength into the auction lanes for those lower end units and some of your traditional high end units. We have folks that are predicated their business models on competing with the franchises. They don't do the current year model, but they're very near the luxury models or very late mileage cars. So they're actually in the lanes competing as soon as it comes out of the closed sale. So a good comparison is looking at the retail rates. So to really show the impact of what an independent dealer or what this independent marketplace has, I just took a look at private sales constitute 29% of overall retail sales. And this is from the 2015 U.S. retail auto sales data. Franchises are 37%. So anybody good at math, 34% come from the independent dealer. So that's a very strong, vibrant marketplace that sometimes gets overlooked because they don't have the nameplate shingle and they're not in your closed sales or they're not in your factory sales. So let me ask you a question. For every new car franchise dealer sales, what percent generally has a trade-in? For your individual marketplaces, how often does that franchise dealer have to handle the trade-in? 80%? So unless, yeah, actually it is 80. It is 80%. It's on the next slide. But unless it's a later model vehicle, the trade-in typically doesn't stay with the selling franchise dealer. That's where you come in and, as the auction provider, giving that trusted marketplace to liquidate that inventory, and typically it's the independent buyer that's the one raising their hand, waiting on that vehicle. There's less and less direct buy-sell relationships with the franchise groups. That used to be the way that we did it. I know a lot of us grew up kind of doing the hand sales back and forth. You would show up, you would buy everything, or else you couldn't get the good ones. You're nodding your head, you remember those days. Now those relationships are typically blocked or very tightly controlled because they have to liquidate it in trusted marketplace of an auction. So nurturing the relationships with those independent dealers give you that avenue and outlet for those units for your seller. If you think about if they're selling those units, they're also one of your heavier buyers, you can then attack that more holistic relationship and drive a greater depth into that relationship because you can service more of their needs. And so as Mike was saying, the independent dealer conversion rate for transactions of those trade-ins is running around 80%, but that sets up that initial transaction for that sale. If there's not a ready outlet and marketplace for those trade-ins, what happens to the initial sale? It becomes more difficult because they can't accurately predict what the ACV is going to be on that unit, because then they may get stuck with it. It may not be a unit they want to retail. They need to have that ready outlet, which is where the auctions come in. And a lot of people miss that piece of the ecosystem. So if you think of all vehicles in operation, everything on the road, it's 283 million vehicles are currently out there somewhere. Used vehicle transactions in North America were about 42 million units. New vehicle sales coming in to the ecosystem around 20 million units, and about 13 million are going out the back door. They're totally removed from operations, with salvage auctions consuming about 4 million of those. The rest become scrap or lost. There's a lot of lost vehicles out there that I really didn't realize until I'd gotten a closer relationship with Insurance Auto Auction. They're just basically abandoned vehicles. They're in tow yards. They have mechanics liens on them, and they're just a frozen asset. The consumer-to-consumer space is about 12 million units. Retail used vehicle sales are 30 million units. So then the wholesale auctions with the physical and virtual are 10 million units, and then trade-ins or those other purchases are 20 million units. So when you look at those 13 million vehicles that are removed from operation, the 4 million of salvage, you really can start seeing where the strength of that independent buyer comes in. So starting with the 42 million used vehicle transactions, 12 million handled privately from consumer to consumer, it's 20 million out there is your piece of the pie that you need to find out. Do you have enough of that segment or not? So why do dealers choose floor plans? It doesn't have to be my floor plan, but dealers in general, they choose floor plans for several basic reasons. Liquidity, bandwidth, the expertise that the floor plan provider can bring them and help guiding their business, inventory sourcing, being able to have a wider net to cast in order to source the inventory they need for their businesses, and industry credibility. Who wants to meet Joe's Used Cars at the auction? I want to buy 10 cars today, here's my check. Would you rather have that, or would you rather have, hi, I'm Joe's Used Cars, I need to get registered for your auction, and these are my floor plan providers. I probably will buy 10 cars today, you can put them on my floor plan. What's the transaction that you would rather have in your marketplace? So it creates a level of security and also better cash flow. You're not having to chase something. If you're dealing with floor plan providers, they typically are paying either at 12:01 midnight or that very next morning as you're transmitting the data back over. So it creates increased liquidity for the auctions as well, but it's predictability. You have the transparency that you need in order to conduct business with that dealer, because you'll know what their availability is for that auction that day, and if it's below that limit, you're going to receive your funds. So then you have a very predictable marketplace. So your Ford franchise dealer may buy 2,000 late model units, but when they need to sell those 4 or 5-year-old cars, you want them to know that they can come to you and you have a vibrant marketplace to liquidate them. So for your auction to thrive, you need to make sure that you have a very diversified independent dealer base to make sure that all asset classes running through your lanes can get liquidated at the highest value. The franchise dealers are up on the block, they're selling on the open sales to these independent dealers. So you're, again, that depth of the relationship. And while you may not love all of them, they are a very important piece of your business. So I know that they sometimes can be a little higher maintenance because they have very unique things within their business model, but making sure you develop the relationship with good quality independent dealers drives the conversion rate and the market transactions in your lanes. So there's a couple of things that you just have to ask yourself is, does your auction have the right mix of dealers? You need both. You don't want to be too heavily weighted in any one segment because then you're more likely to lose transactional volume. And do you want those higher dollar transactions and the greater conversion rates? I think all of us, it's kind of rhetorical, yes you would. And the floor plan companies really have that liquidity pipeline into your auction lanes, and they can provide a lot more stability on those two metrics. So one of the things I encourage you to do is meet with your floor plan provider, whether it's one of us or someone else. Make sure you're sitting down with the folks that you see are flooring vehicles and making sure that you understand and have a relationship with what they're looking for. What are they doing to make sure that they have a very stable relationship with their dealer, therefore you have a very stable buyer. So we can be part of a check and balance on making sure that you have enough active dealers in the lanes that have liquidity that's very predictable and reoccurring. Any one of us from AFC would be glad to talk to you about that, but it doesn't have to be us. I just encourage you to talk to anybody that is providing. Look at where your cars are being floored, and other than the captives, which I think you need to talk to them as well, just to understand what's going on in the marketplace. but really drive the point home with the folks dealing with the independent dealer, because they can give you much more insight and really introduce you to those folks, help you build that relationship, steer you in the right direction based on the availability that we were talking about just a moment ago, to know who should be doing that. So several of us are here this week. Myself, Deborah Callahan, who's sitting up front doing a great job on running the audio visuals, Steve Brown, who is in here, and then Jeannie Wazinski, who is here. She's actually receiving one of the 40 Under 40 awards. So now I'd like to open it up to any questions. Right. Right. Mm-hmm. Mm-hmm. Yes. Mm-hmm. Yeah. Yep. And I think the keys of what you were saying, and I agree, it's the communication, whether it's with us or any other floor plan provider, making sure that you have a good, solid relationship with them. You meet with them on a regular basis, find out what's going on in their world. They're going to have a different point of view and a different set of eyes on a particularly different segment of our industry that could be very helpful and meaningful to you. And if you have that diversification of your buyer base, you're going to have much more predictable results and conversion rates in your auction lanes, which are going to delight your sellers. Your sellers want to make sure that they bring a vehicle to you to liquidate it at the highest possible price that day. And if you lose those buyers, you need to have somebody that can step in and replace them. So having that whole spectrum of folks with their arms ready to go in the air can be key to making sure that your lanes are very productive. And it's something that, frankly, I feel you should be pitching to your sellers. Yeah. Any other questions? Okay. I appreciate y'all coming out, and it's something that I get very excited about. I think it's really kind of an underlooked niche in what's going on in the auction marketplace, is making sure that you have that diversification of buyers, because they really drive a lot of the downstream transactions for your sellers, and you got to have sellers. So, thank you for your time.